IZ Corp Radio, 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 IZ Corp Radio. C Web Design. Need a website? C Web Design brings into perspective several different concepts of web design creation which are superior to the industry. This makes C-Web the right move, the right choice for small business as well as high-end professional business. C-Web Design. C-Web Design is a member of the IZ Corp Exchange in good standings. Go to cwebdesign.weebly.com for more information. Good afternoon, everyone. We're listening to IZ Corp Exchange Radio, and IZ Corp Exchange Radio is, and you're dealing with Mr. Ebo Richards, aka InvestorOne. And I have to tell you that to become a member of Smart Investor Society, which this segment is about Smart Investor Society on IZ Corp Exchange Radio, is $25,000 per year per membership to be become Smart Investor Society. Okay, good afternoon again, everyone. My name is Mr. Ebo Richards, like I said, and we got a lot to get into, so let's get right into it. This segment is called, before we get into the juicy things that I know everyone wants to get into from the previous show, we want to look at, we have a segment, we have an article here that I want to share with you, and it's called Remember What You Said, because we all want to buy stocks. You know, we're all guru stock pickers here at Smart Investor Society, right? Right. So it goes to say the rise of interest rates could affect emerging market strategies. Many modern day managers are equipping their portfolio with REITs, power shares, and UTIs. This is a risk-adverse investment strategy that flirts with the long-term profit taking. Currently in the U.S. market, the effect of easing is attracting emerging market investors. The adverse risk is that through regulation, or regulators are in fact slowing down, re-implementing higher rates. Many investors on the U.S. mainland are bracing for a culture shock, which implies that regulation will raise the rates faster and steadier in a language that investors can better identify themselves with. The inevitable is fear that stocks will jolt in the opposite direction of wherever they're headed, which means we were in a strong bull market for the last 5 years. Emerging market investments will feel the burn, the rates being forced into the economy though jobs are stabilized, even though the concern of housing markets is in an up pattern rather quickly brings up another housing talk bubble. Not so much a credit crunch, but with the debt and its limit where it's at, the U.S. economy welcomes any and all rate hikes. This strategies in the long term, will fall into the levels where many may never recover off its comfortabilities. Markets shouldn't break down, but the reality is investors will hoard cash and buy less stock. And the economist Mr. Richard goes on to say thank you and have a great day. By the way, this is Mr. Ebo Richards, aka InvestorOne. The reason why I just brought that up is because when the interest rates were introduced, ever since 2009, since Fed Chief Yellen came into the market, even before that, there was a big panic. You know, every time that you would be sitting there by your screens or by your TV or in your meetings with your staff and your team or something, and you would be there looking and saying, the rate hikes are coming, get ready because we're going to hedge these things and the market's going to fall out of bed. And it's going to fall out of the sky, and then the next day it's going to fall out of bed. And then the next day it's going to fall out of bed. And then we come back in 6 months, we'll be right where we started with the crash. Well, that's what a lot of professional market makers, investors, managers, business owners, stock traders, you name it. I've heard it all. But I stuck to the guns to say, the resilience of especially the U.S. economy leading the charge. I thought it would boost the stock. You bring the interest rate into the bank, it boosts the banks. It makes the banks be able to hoard and make more money. But they're still arguing that despite that's all that's gone on in the last year or the year and 6 months, that stocks will still end up plummeting because as more interest rate hikes come into the market, the stock market won't like that. Well, Investor One still tells you from day one, good luck with that. And you might be able to catch this article on LinkedIn or Facebook under Ebo Richards. The other thing we want to look at is your strategies again. We always give you this is a good one. This is always a funny one. The markets can be very volatile. So many consider themselves speculative, whatever that means to you. Always use money. If you can't, like it's pretty much like the over leveraging. It goes hand in hand. If you can't afford it, then don't trade it. It's just that simple. If I need this money to buy my kid shoes, then don't wire it to your broker and say, "Oh, I'm gonna double this money in 3 weeks, and then I'll buy him 2 pairs of shoes." Just don't do it, because then your kid will be walking. Most likely, your kid will be walking. Well, it's a good chance your kid will be walking around barefoot for this summer. So just don't do it. Now, getting to the nuts and the bolts of what we were looking at. Remember, volatility versus risk. That's what we're doing here at today at Smart Investor Society. Yesterday, we picked EA Sports. EA Sports. If I'm not mistaken, let me look at this this thing here. And we got the fill at... We were filled at 112, I think. 112.63. That's what we picked. I think that's what we picked that one up at. Let me see. So, I don't know if you got any of that action. I'm not selling my 100 shares of EA Incorporated or whatever it is. I know it's the John Madden game, and I've been watching it for a while. Yeah, we're up $1.72. My screen tells me I'm up $1.35. So we're going to stick with that one. It has a nice uptrend. The next stock we're going to look at is because I have 10 companies here that we're just going to go ahead and build a portfolio with. But we'll just leg them in slowly. Today, we got this at 112.63. Today, we're going to buy some ISRG. That's intersurgical relative, whatever that is. Yep, we're going to look at that one right now. ISRG, everybody. ISRG. Pull up your screens. You smart investors, you know what to do. These other guys, I don't know what they're gonna do. They're just gonna read them and weep. That's what I think they'll do. Oh, and there's another one too. Wait till we get to the end of the week. IZ is what does that say? 910. 910. 910. So the stock we're going to buy today is ISRG. Hopefully we get a good fill. So that would be 2 stocks in the portfolio. We're not just going to do 10 trades. We're just going to work the portfolio for a year. I'm going to disclose the number of trades, but I won't disclose the amount of money in the account. Because I don't want you to take on any risk if you're not part of this. Well, I do. I really do. Because, if you feel the burn or you get the success, then you're a hero. But then without me, you go on your own. And I don't want to totally mess up your life. So we're just going to have a little fun here. Hey, how you doing? Yeah, Oh, excuse me. We're almost done here. ISRG, everyone. We'll be looking at ISRG, and you can add... I'm going to take 50 shares of ISRG. 50 shares of ISRG, and you can add that to the 100 shares of EA Sports or whatever it is. Again, this is Mr. Ebo Richards, Smart Investor Society, Mr. Ebo Richards, a.k.a. Investor One, and you have been listening to IZ Corp Exchange Radio. IZ Corp Exchange Radio and Smart Investor Society are both members of the IZ Corp Exchange in good standings. Thank you and have a great day. Goodbye.